Shiva, so students, herein the screen got stuck. So what I'll do is this, that this is what primary has been there. Any case, you can take a screenshot. Those who are watching this online lecture right now, in this case, or maybe you can thereafter again refresh it. Means you can always see it later on. Also, the initial part you can pause it and then you can try to copy these things. Okay, what I have made you write. All the online students right now, so you can copy these things primarily later on. I have made this thing set off and all. I think this is where the screen got stuck. So you can just pause it whenever you want to, and then thereafter, students, in this case, this is the fifth class, part B. Then the tax, which we have discussed. In this context, you can pause and then thereafter put it. Fine, students. Now, students, what we were discussing right now is the rate of tax. Next page, this is what needs to be written. Now, what is this rate of tax, students? Be careful. So, students, the rate of tax, what we are talking about it, as you know, the rate has to be applied. As you all know, students, the rate has to applied. How the rate has to be applied? In this context, the two things which are being there, students, quickly. Now, what are the rates? Just a second. The rate of tax. One is a special rate of tax, and another is a normal rate of tax. Where the biggest change has happened in students over here. Biggest change. Again, I am repeating, students, to all of you, that the rate has to be applied on what? The rate has to be applied on the value. What is the value for income tax purpose? The value for income tax purpose is the total income. How to calculate the total income, students? This I already have told to all of you. How to calculate the total income? This I already have told to all of you. In this case, isn't it? So now, students, in this context, in this particular context, students, if you all see over here, if you all will see, students, over here, what happens in this context? On the total income, you apply this particular rate on the total income, students. You have to apply this rate, and now let's focus on the rate part. Let's now only focus on the rate part. Now, so far as the rate is concerned, students, be careful. We have on the special rate of tax is applicable on the special income. Now, many students will ask, sir, what is the special income and special rate? I'll give you only a small example right now, because right now this is not probably our agenda, but we will unfold it. But I'll just have to introduce it so that my structure of my explanation is complete and there is no missing link in between. What the government does, this the government use it to the best of it, to the best of its advantage. This segment, it's like a carrot and stick approach. Which approach? Carrot and stick approach. Like for example, a person who earns lottery winning from quiz or these KBC and all, those people, any case, without hard work they have earned, isn't it? So on that, if I charge a higher rate of tax, that person will also not be angry. Why? Because any case, whatever I have got it without putting any hard work, without putting much investment. I got what? I got this money. So can the government think from government point of view? Can the government think of charging a higher rate of tax on that income? Answer is yes. I will not feel the pain. I will feel the pain in that income which I have earned through lot of hard work. And then I see that I have to pay the tax on that. That's where my pain would be. So government understand the psychology of the people, that where people are getting easy money, in that if I have to enhance enhance the rate of tax, people will not people will not complain, and that is what they have done. Similarly, so how what they have done through the special rate. So I will say, I'm giving you an example. Example is what? Example is say lottery winnings. I'll give you also section number, students. Students, I'm also giving you the section number. Why section number? At least for the time being, you write the section number. Later on, we will see. Later on, we will see. Okay. Lottery winnings. Then winnings from here, from race. Here, I'm not aware in Hyderabad what is the situation. You have race course here? Race course? Horse racing? I think it is in Bangalore. In Bangalore, it is there. In Mumbai also, it is there. Mahalakshmi race course. And in Bangalore also, the race course is there. Isn't it? People win. It's not betting. It's nothing but a betting. And they win. They put a bet on a horse. That horse wins. And they get fortune. Now, was he a horse who won? No. He never did the hard work. He just put a bet and he won. Government saw that. And what the government did? They put a higher rate of tax. A higher rate of tax on that level of winnings. Okay? See the mindset of the government. Huh? Second is what? I give you one more example. For government students, security markets, stock markets, investments is very important, because we are watching the potential of the Indian 140 crore people, and that to middle class population. And the government understand this particular potential, that if the middle class starts entering into what? Into the security markets, be it mutual fund, be it the shares, start investing. That is where, because what they say, that so much huge population is there, not everyone can afford to do investment in real estate. Not everyone can afford to do investment where? In the real estate. My saving students is only 10,000 rupees per month. Then what I'll do? Think of buying a real estate? No. But can I systematically invest in the mutual fund every month out of my savings? Mutual funds are subject to the market risk, all that words Whenever you hear mutual funds, this standard subject to the market, when they you have heard, whenever this comes up, they will do it very fast. Subject to the market is that ad is over. You never understood what he said actually. If you have heard of this, you hear this thing. Subject to market, as if the train has gone at a very fast pace and couldn't understand. Nevertheless, it's actually this is very important because then you are systematically investing your saving and you are trying to get a larger gain, which otherwise it is not possible for you with the saving that you are having it from your monthly income. This is what the government is targeting. In fact, yesterday I was watching the news, and that time there was like at night. I then in the news they broadcasted a prime minister. He was in Greece, in fact, yesterday. So in the news, his this speech got delivered. He gave one data. One data was what? That just some 10 years back, there were in the mutual fund in India around 8 lakh crores of investment were there. And today there are some 30 to 35 lakh crore of the investments are there in the mutual fund. This is a kind of a growth. And one of the most important factor for this huge growth in the security market is the tax rates. One of the huge growth in the security market is because of what? The tax rate. Which is what is the tax rate? It is very low. So whatever gain that you will get, the gain is what? When I'll sell the security, and by selling the security, I'll get a gain. That gain, government is taxing at a very lower rate. So it means what? Like think of a normal case. Normal cases, I have got 100 as my income. Tax, say for example, is 30. So I get in my hand how much? 70. But supposingly, if 100 is the income from that securities, mutual fund, shares, and the tax on that is 10. Tax on that is how much? 10. Then 10%. 10 means 10%. Then how much is tax? Only 10 rupees. How much is in my hand? 90. And this is what the government has done. So by bringing down the tax rate, where in the stock markets, in the security market, the government has been successful massively to introduce the middle class to the security markets, because they understand that these middle class population with 140 crores people and India are from the poverty line, they are coming to the middle class. In that, can you think that these people will be investing in the real estate? No. Where they can invest? Government says don't invest in the gold, because gold is something government doesn't want, and that's the reason why gold price will always be high. Government doesn't want you to invest in gold. I'll tell you the story later on, because they say that it's like a dead resource. You take the gold and then you put it in the bank and then you forget, and your third generation, fourth generation will open it and then they will get it. That much period, that money got blocked. That entire money or resources got blocked. For 3 generations it got blocked. And in some cases, 7 generations it got blocked. It is there as a heritage. Kind of a thing. So that is the kind, the Indians are so much attached to the golds and all, and this is a slight. So nevertheless, so government doesn't want that people should go there. People come here, I give you what? 10% tax rates. 10% rate of tax. Now 10% is a special, isn't it? And that is what it is. So special rate students, which is section 112, 112A, and one more section I'll give you. 111A. You'll say about we want to know what is written in that section. That I will tell you in the relevant topic. Right now you write right here in capital gains on security transaction. What is the capital gain? Excitement is there, right? To know. So what is the rate? That excitement, 10% I already told you. Okay, I should not have told you, but I have told you. But you don't write. Why? You will write it later on. You only write whatever I have made you write. Write only this much, whatever you have written. We will proceed step by step, brick by brick, and achieve to our goal. So these are some of the example, students. Okay, there are some couple of more examples which you are supposed to know, but that example I will let you know as and when it will come. Fine. So special income, do you know this? Now you know the concept of special rate, where people are not these are got different concept. Philosophy is different. Where people are not working hard, they are getting easy money, tax on a higher salary. Why? He will not feel the pain. In any case, he has not done the hard work, na? It is luck, it is destiny. He got that money. Let us tax on a higher salary. Huge middle class population of India. 10,000 rupees is a saving. No real estate. We don't want it in the gold. Where now we want the direction? Get them to security markets, stock markets, mutual funds. That is where, let them go there. For that, we will give them 10% rate. 10% rate. That exactly what it is. Is that clear to all of you, students? Now we come to our next game. And what is the next game? The normal rate of tax on the balanced total income. Now define what is balanced total income. What is the balanced total income? Total income minus special income. What is balanced total income? Total income minus the special income. Now the balanced total income, you have got it, isn't it? Now on that balanced total income, be careful. There are two rates, students. And which are those two rates? There are two rates, students. One is the default rate. Default rate. As per the default scheme of taxation. As per the default scheme of taxation. This is what is the most important thing. And the second one, students, is what? Is the optional rate of tax, for which the person will have to exercise the optional rate of tax. So two things, students, and the two things are the default rate and second one is the optional rate. I hope that all of you are clear with this one in this context. This is what has changed in the, okay, now please write the section over here. Section is 115 BAC for whom? For individual, HUF, AOP, BOI. First lecture, remember that? In the first class, second class, this was second class. Artificial juridical person. So these people would be covered under this section. These people, students, will be covered under this section. In the second class, students, I have told who are the person. in the second class. I told you the total income of who? Whose total income? Total income of a person. I told it already. Who are the person? Persons are individual, HUF, uh, firm, thereafter AOP, BOI. AOP full form is Association of Person, Body of Individual. Then no, company, cooperative society, local authority, and the last one, students, is artificial juridical person. Fine, students. So primarily, whom we are targeting right now? Whom we are targeting at this stage? Target students, as you can see over here, is the individual, HUF, and only this is going to come in the exam. Rest of it are for financial AOP, BOI, and artificial juridical person. But rest of it, like firm, company, cooperative society, this is for MCQ for all of you. In chapter number 1, it will be there. What is the rate of tax? They will ask you as an MCQ. You should know then. Okay, but problem solving are all the person who have tick marked individual, HUF, AOP, BOI, artificial juridical person. So all the problem solving we will have to do in your inter CA of all these persons. In final CA, problem solving would be of the remaining person. Remaining person, students. I hope that all of you are clear with this one, isn't it? So right now, what did I told you? I told you that default tax regime. What was the word used? Default. What is default? What do you mean by that term? Default tax regime. What is default? Default means it is already there. By default, by default I have done this. By default means it is already in prevalence. You don't have to do anything. Means in the next assessment year, what is the next assessment year? Assessment year 24-25. When I will compute what? My total income of which previous year? Previous year 23-24. In the next assessment year, which is 24-25, when I am going to compute my total income of previous year 23-24, and after that, when I will calculate my tax liability, after that, when I calculate my tax liability, the tax rate applicable to me, the individual, default rate is going to be applicable. What is the default rate? 115 BAC. BAC, which I told you just now. You say, but what is the rate? I'll tell you. This 115 BAC, the default rate. Now, what is this default rate? Means by default it is there. So here I will say herein just a brief thing. In this case, default scheme of taxation. Default scheme of taxation, students. So far as the default scheme of taxation is concerned, what do we say? Here, for in 115 BAC, the total income, students, the total income in this case Please write. In computing the total income in the default scheme, certain certain deductions. Point number A. In each head, underline the word certain deduction. And point B, chapter 6A. Chapter 6A will not be available. Will not be available. Okay. Many students are asking, sir, which deductions will not be available? Isn't it? The best part is that have we learned any deduction right now? Answer is no. So we don't know as such. When we learn the deductions, at that time I will tell you. What I will tell you? Look, if you are in the default scheme, if you are in a default scheme which is 115 BAC, this deduction will not be available. I'll keep on reminding you this particular point. In every heads of income that we are going to do, what I'm going to remind you at that point of time, this is deduction. You learnt it? Yes, you learnt it. You felt good? You felt good. But be careful. In the default scheme, for the individual HUF, AOP, BOI, artificial juridical person, this deduction will not be available. You will say, sir, in that case, then why we are learning the deduction? When by default, this deduction is not available, then what was the use of learning this deduction? Can you tell me what was the use of learning the deduction? What was that use then if in the default scheme which is applicable for everyone, like I told you na, in the next year, in assessment year 24-25, when I will file my return of income, by default the which scheme is going to be applicable? The default scheme. Under which section? 115 BAC. Under which section? 115 BAC. And if 115 BAC is available, then what did I told you, students? That some deduction in each head will not be available to me. At the same time, in chapter 6A, it will not be available to me. Then you will ask, sir, then what was the use of learning that section? When it is not available, why we learned? What is the answer? Why did we learn then? No, my question is that if in the default scheme, if the deduction, that particular deduction is not available to me, then why did I learn that section at all? What was the use of that section when it is not available to me in the default scheme? What is that? What? What you said? Optional case. That is to say, what is the scenario? In the optional, I will see what? In the default scheme, it is not applicable. I know that it is not applicable. Some deduction, not all, some. I will see in the optional case. What is the case I am going to see? That here, will it be available? Those deductions which are not available in the default scheme, whether it will be available in the optional scheme? Yes. It will be available in the optional scheme. In the default scheme, it is out. But is it in the optional scheme? Yes. Otherwise, what is the use of the section? Those section has got no relevance. We will see the list of the section. I'm telling you each heads of income. When we do, I'll tell you that look boss, this section is not applicable in the default scheme. Now if you want to take the deduction, if you want to take the deduction of that section, then check the optional scheme. In the optional scheme, you will be getting the deduction. So therefore, that note I'm going to give it to all of you in this case, and that exactly is the game, students, that we are going to play. So have you all written this, students? Every one of you? Total income, in computing the total income in the default scheme, certain deduction of each heads in each head and chapter 6 will not be available. Now write, students, here the rate of tax. Please write. Rate of tax in the default scheme. Before that rate of tax, can I dictate the note? Students, have you all written this like this? Okay, before that, can you just put a note here? Can you just put a note here? I'll dictate the note. I'll dictate the note. Please write. Those deductions, please write in the note. Those deductions which are not available, which are not available which are not available in the default scheme are available to the SSE, are available to the SSE in the optional scheme. Optional scheme. Full stop. Therefore, such person will have to decide, such person will have to decide whether he will have to opt, whether he will have to opt for the optional scheme or continue with the default scheme or continue with the default scheme, whichever is more beneficial to him. Whichever is more beneficial to him. Fine, students? Perfect. Now over here, the next particular point which has been there is the rate of tax. The rate of tax, students. Now, so far as the rate is concerned, students, be careful now, all of you, in this particular context. What is the rate of tax? If he has opted for the default scheme, so that is what we are going to look into it. So, students, here in the rate of tax, in the default scheme, please take note of it. So, you will make a table in this context. All of you will make a table, students, herein, in this regard. The total income, okay, the total income and the rate of tax. Please write here, first one, total income up to rupees 3 lakhs. Quickly, the rate of tax is then from 3 lakhs 1 to rupees, perfect, to rupees 6 lakhs, 5%. Third, from rupees 6 lakhs 1 to rupees 9 lakh. 5% only, students. It's movie time. Movie time, you know, 3 to 6, 6 to 9. So that is how you should remember. We say, but sir, 12 to 3, 12 to 3 is on. So, yeah. So therefore, it goes like movie time only. This is the way to remember it. These are the movie time of our times. Huh? I don't know now what are the movie times, but our time this was a movie time. So now the next is 9 to 12. 9 to 12. Five% increase, students. Start with 5 and 5% increase. You will have to do. Keep doing. Once you touch 15 lakhs, then you reach 20. Then the government says now enough of our patience. Enough of our patience now. Which means this, that. Which means what? Now students in this case here above what? Above rupees 15 lakhs. Now we will not tolerate you. Not tolerate you means 30%. 30%. We will solve the question, don't worry. Right now we have to solve a question also. I'll tell you one thing, students. I told you already initial days, isn't it? I told you what? You people, once you qualify CA, I told you read something. What did I told you? Take a job. And if you want to do your practice, your business, do later on. Initial 2 3 years, take a job. Your salary range would be somewhere over, it will not go beyond 15 lakhs. Also, but we wanted more than 15 lakhs. That's a different story. But think of it, 15 lakhs. I'm telling you up to 15 lakhs and your initial 2 3 years of your life are there. For all of you, this scheme is more beneficial. Which scheme? Default scheme. I'll prove it later on. In initial 2 3 years, you don't do those LIC and PPF. You're young. At least after some point of time, these responsibility come. No? Here you have to get at least enjoy your life. Sometime at least 2 3 years you have got it after so much of hard work. So that initial saving which you are having, at least you'll do some tour. You'll travel. Traveling is the biggest this thing liberator when you see the world. So initial saving, students, I always recommend to the students, initial saving that you should have, you should travel to other place in India, other parts of the world. Initial saving. Once you have done with this, not that traveling can happen till this, but initial travelings. And then thereafter, the savings that you have, then you go for the investments. LIC, PPF, pensions. So those things should touch to your 28, 30. From that age onward, 30 is the best time to start with this, not beyond 30. Then it becomes a bit late. So 28 to 30, around that stage, then you start with your small LICs and all those stuff. LIC you can do earlier also, but I'm just telling in this case. Initial 6 7 years, you earn, you save, you spend in travel. That is the best thing that you can do for yourself. Because as you evolve, you are entering into your career, you are going to see the world now in a different perspective. Your mind has to be large. You just cannot be a very narrowed in this particular case, because then you need to be sensitive to the other people also. That sensitivity has to be there. So those age of your students, when you have those income bracket, you are not doing those LIC initially. I can tell you the best scheme for all of you is the default scheme. For me, I will not consider this, because I will prove it from every chapter after chapter which deductions I am claiming right now, and because of this, that deductions I am claiming, and I can see in the default scheme this deductions is not available to me, because some deductions I have to forego, I cannot take. But those deductions actually is very dear to me. Why? It's a heavy amount which I am paying right now, which I am getting a deductions. I cannot simply let go those deductions in a default scheme. You can afford to do this. I can't. And therefore, for me, I'm already decided in my mind. For me, what is better? Optional scheme. I will have to go for the optional scheme only. I cannot go for the default scheme. But I can see all of you at this age, after qualification, CA, next qualification, next 5 years, the default scheme for you is the best. After qualification, 5 years, default scheme will be the best. Post 5 years, you will also be like me. And at that age, you have to decide whether a default scheme you have to take or you have to let go of it. Which deductions will go out in the default scheme? That I will take you through chapter by chapter. But I'll tell you then at that stage, remember, I'll tell you, for you at this stage, this deduction is not applicable. So go for default scheme. For me at this stage, this deduction is very important. I cannot go for the default scheme because I am paying huge amount here. If I take default scheme, I will not get a deduction. My income would be higher. I want to reduce my income. In a default scheme, it cannot be reduced because I cannot get deduction. If I go for the optional scheme, then I get this huge deduction of my expenditure. And if I get a huge deduction of my expenditure, income will reduce significantly. And this is where you should always keep in mind. Have you all written this one, students? Okay. Now, students, after once you are done with this, Draft students add surcharge as applicable. Today I'm not doing surcharge, students. Congratulations. Tomorrow I'll do. Okay? It's a different concept of surcharge. Just write this much and then take a subtotal. Take a subtotal, students. After this, add what? Health and education cess. Heard of it? Health and education cess. Remember the first class? I told you about what? Yeah. Duty, tax, cess. I have not explained you the cess at that stage. I told you that I will explain you later on. I'll explain you now. 4% of this amount, students. Subtotal. You just write like this one, subtotal. This is a subtotal. 4% of the subtotal. Then whatever is the amount, thereafter total tax. Total tax in the bracket, rounded off. This is half marks. Nobody knows. My student told, who is a head examiner of your CA entrance, CA final DT paper in India. She told, what she told, sir, tell the students that the tax, whatever they finally arrive, that needs to be rounded off to nearest 10. Nearest, huh? Nearest rupees 10. If it is taxes 4,922, 4,922, then what are you going to say? 4,920. 4,000 nearest 10 is 920 to 4,920 is the tax. If you don't do this, what she said, sir, half marks we deduct. Half mark we deduct if you don't do this. She told very categorically. That is instruction from the ICA. So nearest 10. Is that clear to all of you? Now, students, cess which is there of 4%, it is also a tax. You say, but then, sir, what is the difference? If it is also a tax, if cess is also tax, then what is the difference? The difference is, say, cess is also like a tax. You have to pay to the government. But what is the difference? The difference is this, that this is a specific charge. Specific. The collection which the government will have. The collection which the government will have. Tell me where it will go. Where this amount will go? Towards health and education. What about this collection? What about this tax collection? See here, students, you just do this. Just can you do this one if you have got this? The tax amount. What about this collection? Tax. What are you going to do of that tax? Can you tell government, my road is very bad. Kindly first do this. Government say, why we will do this? We will decide what we have to do. You can't instruct us. If your road is bad, that is bad. Those things we don't care. We will decide what we have to do. But the moment they are collecting the amount as what health and education says, then necessarily the amount has to be applied only for the health and education. It cannot be applied for any other purpose. That's the difference. So collection of a cess is for a specific purpose. Collection of a cess is for what? Specific purpose. That's the definition. You can write the definition above somewhere or on the last page, as the case may be. Remember your last page? Second class. Collection of assess. Collection of assess is for a specific purpose. Students, now We will solve one question right now, and I'll give you one homework also. Let me see what you people do. Let me see. First, write question number one. Don't forget where we are. Huh? This. We have to write this also. No, the optional scheme is still left. Can you see this? Otherwise, you'll forget. Just you put a star. Because then, sir, we forgot. Now you also forgot. Let go. Put a star. Because that we have to do tomorrow, na? What is the optional rate? Isn't it? So students, this is for the optional rate. Huh? This is what I have told you. Okay? Now students, the question to all of you right now is this. Be careful. Question number one. Mr. X has a total income of rupees 16 lakhs for previous year 23-24, comprising of house property income and other source income. Compute his tax liability for assessment year 24-25 under the default tax regime under section 115 BAC. All of you get started with this. The calci has to be there. Hmm? I have to calculate, frankly. All of you calculate the rates, all of you know. Every one of you. Four lakh. All of you getting this? 4,99,200. Let's see, students. So you have to, students, tell me about this one. Just all of you through this. Every one of you calculate. All of you calculate, students. One try everyone has to do. One try. Have you all tried? All of you? How you present the answer, students? How you present your answer? Computation you have to write like this. Of tax liability. Computation of tax liability. Of whom? Mr. X. For which assessment year? Assessment year 24-25. So, tax liability, 3 columns is what is required. And what it is? Or maybe 2 columns will be sufficient. First rupees 3 lakh, students. The answer is nil. All of you agree? Next rupees 3 lakh. 2 rupees 6 lakhs. What is the rate? 5%. 5%. So difference you have to take. Na? So on this difference, how much is the difference? 5% of what? Rupees 3 lakhs. So how much you get? Rupees 15,000. Point number 3. Next rupees 6 lakhs. 6 lakhs 1. 2 rupees 9 lakhs. How much is the rate? 10%. Again, difference is only 3 lakhs only. The difference is there, isn't it? So that much is how much? 30. The fourth. Next. Rupees 9 lakh 1 to 12 lakhs. 15%. 15% of what? Of rupees? Again 3 lakhs. How much is that? 45,000. Then fifth. Next what? Rupees. 12 lakh 1 to 15 lakhs. I told you till 20% we will tolerate you. 20% of rupees. How much is that? 60,000. And last, balance. How much is balance? Your rupees 16 lakhs minus 15 lakhs. That is the balance, no? Balance is 1 lakh. How much is the rate? 30% of rupees 1 lakh. How'd you get? 30,000. Tell me the total. All of you. 1,80,000 students. After that, students, you'll add, say, surcharge. Now you'll say, but surcharge? Just for timing, write nil. You don't know the concept of surcharge right now? Just write nil and have the habit of writing, take the subtotal. Have the habit. Subtotal is 1,80,000. And then add what? Health and education says at 4%, which is 5 students. So now the total tax is how much? 187, 200. Is that point clear to all of you? Write question number 2, which is your homework now. Please write. Let me see how many of you now will be in a position to crack it. Mr. Y. Mr. Y. Has the following income. Has the following income on during the previous year 23-24. House property income rupees 13 lakhs. Winnings from lottery rupees 3 lakhs. Next line, right? The lottery winnings are taxed at special rate of 30% under section 115BB. Under section 115BB. Compute the tax liability considering the fact that Mr. Y has sorry, not defaulted, default has opted for default tax regime. This is a homework question, students. But again, I will repeat to all of you before you do the homework question. I'll explain to you. and be careful when you solve it. Don't forget from where you have started the journey in your life. I told you yesterday also. So from where you started the journey today? Today's journey started with the rate of tax. Today's journey started with the rate of tax. Now rate of tax I told you there is a special rate on the special income. If there is a special income, please pay attention to my question. Please pay attention to my question. If there is what? If there is a special income, then on that special income apply the special rate. On that special income apply the special rate. Okay. Now my question to all of you is, if I am an individual, Mr. X, Mr. Y, and I have a special income, okay, then if I am opting for the default tax regime, which is 115 BAC, then in that case, whether on the special income the special rate will apply. If I am opting for the default tax regime, then whether on the special income the special rate will apply or not. Go through this chart and tell me. See the chart and then tell me. If I have got a special income, then whether the special rate will apply on me or not, even if I am taking a default tax. Even if I am going with default tax, answer is yes. Why? See for yourself. I have written here, not rate of tax. First is special rate. I have already sidelined the special rate. The special rate you can see over here above me. So I have already sidelined the special rate. Thereafter, then on the balance, see here the balance I have written for all of you on the box. Can you see that? On the balance total income here. So balance total income, what is the case? It would be default rate. What is default rate? Just now I gave you the slab, na? Up to 3 lakhs nil, 3 to 6 lakhs 5%, 6 to 9, 10, 9 to 12, 15. Those I have given to all of you, isn't it? So even if I am going with the default tax regime, still on my special income, it is the special rate only will apply. This is a thumb rule that you will have to always keep in mind. Just write a note before you start the solution. Write a note. And solution you people have to only do. Write a note. Even if the person has to opt, even if the person has to opt for, even if the person has to opt for a default tax regime, students, can you just delete this word opt for? Delete the word opt for and please write even if the person is under default tax regime. Even if the person is under default tax regime, comma, the special income included in the total income included in the total income will be charged to tax charged to tax at a special rate at a special rate and the balance total income and the balance total income will be charged will be charged to tax will be charged to tax as per the slab rate of default tax regime under section. What is slab? You already know what is the first slab. Up to 3 lakhs nil, that is the first slab. First floor, first slab, building construction, first floor, first slab. So what is the first slab? Up to 3 lakhs nil. Second floor, second slab, 3 lakh 1 to 6 lakhs 5%. The third slab, 6 lakhs 1 to 9 lakhs 10%. Thereafter 9 lakhs 1 to 12 lakhs 15. Thereafter 12 lakh 1 to 15 lakhs 20. After 20, 15 lakhs above 30. But this slab is to be applied. Student, this slab has to be applied on what? On the balance total income. Balance total income. Please highlight the word, underline the word. On the balance total income, you apply the slab rate of default tax regime. On the balance total income. Is that point clear to all of you? So, I'll see your answer, students, tomorrow. Get the answers right. Fine. Surcharge, you'll just presentation wise same. Surcharge would be there. So, please hear what will happen. First, special income, special rate. That is the first step. Second would be then balance total income. Get the slab. On the balance total income, you will have the slab. Special income 3, special rate. What is special rate? Told you 30%. Balance is how much? 13. On 13, apply the slab. What is the slab? We already did. This is the slab. This is what? This slab. This is a slab. I hope that every one of you are clear with this one. This is a slab. Fine. And that exactly is the point. So this is how it goes with this one. So I hope that this point is well taken by all of you. I'll see you tomorrow then. Okay. Do this particular thing. Take 20 minutes break, students, and then your FR will start. Accounts.